Hi, my name is Christian Waldegrave, Manager of Research at Teekay, and this is our conventional tanker market update for June 2014. Well, tanker rates during May were really quite weak, and that was a continuation of what we saw in April as well. And really this is seasonal weakness that is affecting the tanker market. There's still ongoing refinery maintenance, particularly in Asia. The US refineries are starting to come out of maintenance, as are the European refineries, but in Asia there's still quite a heavy maintenance schedule right through to the end of June. So that's affecting demand for crude tankers. The one exception during May was Suezmax rates cross-Med, which during the second half of the month and to the back end of May got up to as high as $30,000 per day. And what we think happened there was that during the early part of Q2, when rates were weak, we think a lot of Suezmaxes were fixed from the Atlantic to the Pacific. And then some of those ships have stayed in the Pacific basin and haven't ballasted back to the west. So that meant when the cargo started to pick up a bit last month, there were fewer Suezmaxes available, and that drove the rates up a bit. But on the flip side, the Aframaxes have been doing quite poorly in the last month or two, particularly in the Atlantic. And that's related to a lot of supply disruptions going on in the Med region for Aframaxes. For example, Libyan production, which has been up and down during the year, is almost at zero now, so that means fewer cargoes for Aframaxes. And there have also been some supply disruptions out of Ceyhan in Turkey as well. So they've been having a negative impact on the Atlantic Aframax market. The product tankers have also been quite weak. The MRs really have been weak all year. And a lot of that's due to fewer export cargoes out of the US than we saw last year, but also just the effect of fleet growth. There's quite a lot of new MR tankers coming into the market. The bigger product tankers, the LR1s and the LR2s, have been doing a bit better in the past month or so, but we think that upcoming petrochemical plant shutdowns in Japan might have a negative impact on LR1 and LR2 demand in the next month or two as well. But looking into the second half of the year, we can see a much improved demand environment for tankers, in particular for crude tankers. If you look at the first half of the year compared to the second half of the year, in the second half the call on OPEC crude goes up by about 1 million barrels per day, and that's because demand is expected to go up in the second half of the year, whereas non-OPEC supply stays kind of flat. So OPEC's going to have to pump more crude oil in order to satisfy global demand. And that could really benefit the large crude tankers as well, because some of these supply disruptions that I already mentioned in places like Libya, in Iran, Iraq and other places in that region mean that countries like Saudi Arabia might have to pump more oil in order to make up for that shortfall. And so I think we might see more Middle East volumes as we go into the next couple of months and into the second half, which could have a positive impact there on the VLCCs and on the Suezmaxes. If we look at some other wild cards for the second half of the year, really Libya is a big wild card. As I mentioned earlier, production and exports almost down to zero again now. But the situation in Libya, the political situation, is very volatile. And certainly if the situation were to improve and we saw exports flowing again from Libya, then that could be a positive demand fundamental for Aframaxes in the second half of the year. The other kind of wild card is what's going on in the US. We see that the US is sending more and more cargoes by sea to Canada, crude cargoes that is, which is creating some positive demand for Aframax and Suezmax. And we think that the pressure is starting to build in the US in terms of allowing more exports to leave the country, whether it's maybe reclassifying crude condensate so that they can be exported. But certainly in the US you've got a situation where oil production is increasing, but it's the wrong type of oil for their refineries, and so this surplus of light crude is developing, and I think the US is going to have to find a solution to what to do with that oil. So that's certainly something to look out for, some kind of policy decision in the US which may allow more crude to leave the country. On the fleet supply side, it's really unchanged from what we've been saying the past few months. Our forecast this year was for tanker fleet growth of just over 1%. Actually, it's running a bit lower than that. Looking at the first 5 months of the year, we're on track for about 0.8% fleet growth. So if anything, that tanker fleet is growing slower than we thought it would. And again, that's going to be a positive factor over the next months as demand starts to rise. the fact that the fleet isn't growing should mean that we'll see an increase in fleet utilization and therefore rates going into the winter months. So that's our outlook for the conventional tanker market for June 2014, and we'll speak to you again next month.